Hi, welcome everyone. Thanks for tuning in. This is another interesting session of our charted series after what has been quite a volatile weekend. And just for those of you tuning in perhaps after the fact, the event we're mostly interested in from the weekend was quite a significant flash crash. So for me, my starting point, I think Willy Woo called it in saying that it was related to the hash rate drop from one of the provinces in China having a complete blackout. But let's see, this is charted. It's all educational, not investment advice. And we've got Shanky here live to see what he thinks and to look at what was the aftermath. Hey, Shanky.
Hey, Paul. How you doing?
Yeah, good. And didn't lose too much sleep. As always, as we've said, don't over leverage and sensible take profit and stop loss things there. But a lot of people really got wrecked this weekend. It was, I think, about $10 billion of liquidations on some of the derivative markets for Bitcoin and Ethereum. Not something that every trader will have enjoyed this weekend, that's for sure.
Yeah, certainly. I think BTC has been playing games a little bit for the last few weeks, as we've seen, right? We also did that whole session on BTC alone and the pricing models last weekend, and I think we did see that we're sort of feeling that resistance around the 60,000 mark, roughly in that area, and it seems like added to that, this whole sort of unfolding of the hash rate suddenly reducing seems to have really created havoc. So yeah, it'll be good to see the charts. It'll also be good to kind of try and understand what all may be the possibilities. Right now, of course, there is no definite way of predicting it because it's not like there is a very clear sort of a model that could be used. There could be multiple hypotheses, and if you really look at Twitter over the last 24 hours, that's really what's happening. Everyone's putting their hypothesis out, and there's a lot of stuff going on, right? A lot of different sort of analysis of what really happened, right? And
yeah, and like we keep saying almost in every episode is, the charts can only kind of tell you what has happened. None of the indicators or anything can ever predict what is going to happen, especially those externalities. So say it was, a price signal as a result of, hash rate drop into some algos that maybe had significant enough positions to start that downward spiral. But it's only speculation. It's hard to ever predict that would happen.
Yeah, completely. So yeah, let's look at BTC USD chart. Maybe that's a good starting point.
Great. Pull that up.
Excellent. Yeah. So we saw this in our exhaustive sort of digging into the world of BTC last week. There are a couple of things that one should just sort of at least level set around or keep in context before we jump into trying to understand, right? Like what could be the chart telling us? So the one thing that is very clear is certainly this area around the 60,000 mark. I have actually created an area, which is the right way perhaps to look at it. There's just not a single line, but in and around 60,000 has been a price point or an area that has acted as a substantial area of resistance. So BTC tried to break through this early on. Late Feb kind of almost got there. March, few attempts trying to break it. Just about touched it, and then finally we saw, after sort of 3 attempts, it finally broke out on the 13th. And when that happened, one of the things that I, certainly was sort of thinking through was, is this a true breakout or is this a fake out, a false breakout? And the reason I was a little suspicious personally was because if you just look at the chart, the volumes had been sort of dropping. And I think there is also a lot of other news, beyond this chart, which was saying that a lot of spot activity was reducing. We also know that, given the other models, the stock to flow model, the sort of power law growth channel model, and every other model is expecting BTC to kind of break through the roof, right? Go towards 80,000, 100,000, what have you, right, over a period of time. And sometimes, as we've seen with the trading community, when there's a lot of noise around the theory, it sort of tries to go in the area of becoming a self-fulfilling prophecy, right? Where it's like, okay, let's make it happen at some level. My sense on the 13th was that that's what happened. Okay, now of course I cannot confirm it. I cannot argue against it really, because it could be just genuine buying interest. But just looking at the candles before that, which had become very small, there was so much indecision, the multiple attempts. You could really sort of argue it both ways. You could say, well, it was a breakout. That's how breakouts are formed, right? Sort of, back and forth a little bit, indecision, and then finally the market moves in one direction, either up or down. In this case, it moved up. But then when you see the charts beyond that, 14th, 15th, and all the way till today, the story tells you a very, very sort of a different picture altogether. What it really shows is a couple of things. One is, of course, we saw the price retrace a fair bit, kind of come back into in fact, almost falling back in that 55, 56,000 range, and even coming as far down as closer to 50,000, right? So we definitely saw a very sharp correction, which definitely, in very simple words says, well, there wasn't enough buying interest, right? Now, one could dig into why there was not enough buying interest, but, just looking at the chart, certainly there wasn't enough buying interest. There was more selling interest, right? It could be various theories behind this thing. One could be that, people did expect the price to crash, so there was quick profit taking, and, so therefore it cascaded. The other bit is that because spot activity had dried down and futures was very leveraged, the moment a little bit of selling started, it also led to price going down, led to liquidations, and then everything else sort of went down. The whole domino effect, right? It just went down together.
Yeah,
it could be that as well.
Also, right? You talked about kind of the noise or the speculation on Twitter in the last 24 hours, and without there being a consensus around what caused it, I think some people are hesitant to jump back in until there is that kind of narrative of, okay, yes, it was this one thing. And if it was technical, we could expect it to recover. But if it was something else, regulatory or elsewise, external influences, then maybe it won't correct. Maybe it was, this is the price that we should be expecting now. So I feel like a lot of people are hesitant to re-enter in that buying position.
Totally. Yeah, absolutely. In fact, what we should do is we should bring in the standard sort of moving average indicators to see where it is with respect to the trend, right? The trend is still upwards. I don't think the trend has been questioned yet, but let's see how far is it, with respect to the trend. The bits that we like to kind of go through is just look at the 20 and the 50 MA and see where the price is with respect to those, right? So,
yep.
So we do see some sharp correction, right? Of course, the price breached the 20 MA, it even went down below the 50 MA. But if you look at the broader, sort of scale of things and the broader context, for the most part, it has still remained upwards of 50 MA. So I don't see the trend really reversing. So I would not read this as a trend reversal at all. I don't think that has happened yet. Now, of course, this could lead to a trend reversal, so that one is not denying yet or one is not concluding yet. But overall, if you look at the market, it still seems to be trending upwards. Certainly, the market has been a little sideways, right, with a lot of indecision over the last month, which could be read both ways. One could be that it's trying to find that balance and then eventually will keep going up, right? The sort of bull market continues. Or the alternate theory could be that, it has come to a price point where it is frothy enough that, the buyers are sort of rethinking, right? The buyers are trying to see, hey, how far can it go up? We understand it's supposed to go to 80K and 90K and 100K and beyond, but is it realistic, right? Is there enough demand out there? Is there enough narrative which is still kind of pulling it through? So it's also possible that it's the beginning of that second set of sort of elements of doubt, if you may, right? It's possible. And both are possible, really.
Also, in our previous charted session, we were looking into Bitcoin valuation models. We then looked at kind of the Bitcoin ETH charts to see how that was playing out. And I do wonder, with the kind of upcoming move towards Ethereum going to proof of stake, if this was a minor issue, do you think we could see the bullish sentiment perhaps moving more to Ethereum, where proof of work is going to become a thing of the past?
Very good question. Also because there are other dimensions, right, of just higher electricity consumption, not being friendly in terms of future of this planet. So there's also narrative around that with proof of work. So, proof of stake seems to be doing better on that count, right? More efficient, whatever, more friendly with the sort of, more aligned, I would say, right, with the sort of climate change, sort of urgency that is coming in globally. So it's possible, yeah, that the sentiment might start moving there. Again, early days, right? So this is something that we'll discover. I think one good way to look at would be, let's look at the relative price, right? ETH to BTC, and let's also look at ETH, what happened to ETH, right? And so I think when we add that up, we might learn a bit more. So I brought up this ETH BTC chart. Certainly ETH is performing relatively better than BTC. That has been the story for most of April. We saw a crossover early on, in the beginning of the month, and it was just built on top of it. And, it seems to certainly be the one that's seeing relative moves which are stronger, with a stronger trend as compared to BTC. So yes, that's definitely out there. That's being observed from the price. In fact, if you look at other altcoins as well, of course we aren't plotting it here right now, but if you were to just look at some of the altcoins that are surging, and you look at that relative to BTC, I think you will see similar sort of charts, or maybe even more aggressive charts, right, where you start seeing the altcoins just moving much faster as compared to the BTC price movement, which was sort of stuck around that 60,000 range. So yeah, this is another interesting vector to look at and see how the capital gets allocated, right? So unless there's new capital flowing in, it definitely is a competition between BTC and the alternatives, right? And one's gain is other one's loss, effectively.
Yeah, perhaps we might see a new all-time high in terms of this Ethereum to Bitcoin ratio there, but only time will tell. So yeah, it's another one for us to check back on in a few weeks and see if it's gone above that
completely
all-time high.
Yeah, totally. In fact, we can refresh this FIP plot that we had done for ETH, since ETH hit its new all-time high since the last time we looked at it. And if you look at it, the ETH price fell as well. In fact, there were some funny flash crashes where I believe it, on some exchanges, the leverage positions made it reach as low down as 900 or something. But I believe that was a DeFi centric flash crash. But yeah, the price has retraced. So from all-time high, which was upwards of 2,500, right now it's hovering around the sort of 2,200 range, which is still pretty bullish, way up there above the EMA 20, but closer enough to the 0.236 fib. So certainly, I think I wouldn't be surprised if this retraces a bit further, right, before it starts spiking up back again. It will not be surprising at all that it sort of goes down a little bit, jitters through, and then sort of goes up back on its upswing. So that's my sort of 30,000 feet take on this.
Yeah, it's interesting when I'm looking at that, seeing that, Ethereum, while it had that candle that went well below the 20 EMA, it still is today above that, whereas when we were looking at Bitcoin just a minute ago, it is right on its 50 EMA for today as kind of post-aftermath. So yeah, very interesting to see whether this will cause a greater divergence.
Right, for sure, yeah. I mean, the ETH BTC chart kind of is telling that story, but I think just looking at the individual charts, as you mentioned, Paul, is very fascinating. If you look at ETH, it's a nice, good uptrend with minor pullback. But, if you start looking at BTC, it almost seems like a struggle around the 60K mark, with a lot of sideways movement and then falling back down. So yeah, we'll see this. This is going to be an interesting next few days in terms of where the price goes. My bet, though, is that the trend hasn't been broken. So eventually it'll go back up. Of course, we could see further drawdowns. We could see further pullbacks. And, we might, in fact, possibly see opportunities for people to enter new positions before the journey is upwards again, right? So that's at least my sort of higher level take here. But it's not going to be a straight line. It's not going to be straightforward. Perhaps we'll go through a little bit of jitters.
Definitely. So what are some other assets that we want to kind of look at, perhaps in the DeFi space?
Yeah. So, before we jump into DeFi, the one token which is sort of new kid in the block that saw aggressive price movement was Rune. So I definitely want to just quickly touch upon Rune, and then we can come back to some of DeFi. So if we go to Rune, Rune just did like a initial launch, right? So this is the ThoughtChain's token, and the launch was somewhere around this time zone. I think it happened somewhere on the 11th, I believe, 11th or 12th. And ever since, this has just taken off. We've seen big, large green candles, as is very evident from the chart. And if you look at this and the other retracements, it seems like, well, it's not giving up. It's still pretty close to its all-time high. Right? So
yeah, no, definitely. I think from a technical perspective, seeing something go from testnet to a mainnet launch without any hiccups, all the consensus protocols, and Rune's a little bit more complicated in that they were also launching a DEX on there so that you could swap natively between all the different assets, the cross chains. So, that's like 3 years of R&D. That there's a lot of moving pieces that can go wrong. And also interesting, no company behind it. They didn't have press releases going out to, all the usual crypto news places. They were just with their community saying, we're going live and let's switch it over to mainnet, and it works.
Correct, yeah. So I'm sort of bullish on this to the extent that I think just the current price action, and again, purely from the price action, forget the backstory for a minute, the price action is very positive, right? There's no two ways on that. Very parabolic. Market has received it well. One could argue, of course, saying, hey, everything is being received well. Anything worth being received well is being received well today. Even Doge is doing well. So what's the big deal? You could perhaps argue like that, right? But but the fact is, Rune has done well, and there is some meat behind it. It's not all froth, right? So I think
I think that's the difference with Doge. It's not like there is a new announcement or some new integrations, whereas here with Rune, it is a milestone in terms of their project.
Totally. Yeah, absolutely. Let's also quickly look at BNB. BNB is a token which we have been watching for a bit. Yes, so even since our last plot, even BNB has gone up further and retraced as well.
Yep, and seeing that long candle yesterday, so it definitely kind of followed Bitcoin and Ethereum down that 15% or more.
Right, absolutely. So the way I look at BNB is because BNB is sort of playing in the same field now as ETH with its whole, smart chain play and the entire sort of ecosystem around it. Things like, Pancake Swap running on it, which is very comparable to Uni, and, so on and so forth. I just feel like I think the best way to compare BNB, relatively speaking, is with ETH, right? So if you look at the chart, it sort of is mapping a similar kind of a trajectory. There's a pretty decent, aligned relative movement. ETH goes up, BNB goes up. ETH corrects, BNB corrects. Kind of, sort of at a very high level.
Yeah, it's been interesting to watch over the last 3 months of that kind of transition from an exchange token to a network token. Had yesterday been worse in terms of uptime for the Binance exchange or other technical failures, it's hard to say whether it would have gone even lower from that, because it's no longer seen as the exchange token. And yeah, so it's still wearing two hats, if you like. But no, this price, as you say, seems very closely aligned with ETH.
For sure. Yeah, the more recent price movement is pretty much tracking ETH, more or less. There are, of course, each have their own idiosyncrasies, and BNB has seen some rapid growth. Right, we saw the first leg here, then there was a little pullback, sideways movement through most of March, and then again, a massive upsurge, taking it all the way up to 600 plus territory. We had one of the guests, BTC VIX, who even projected and claimed, and in fact, sort of has bet on the fact that it might flip ETH, right? That you might end up seeing BNB becoming bigger market cap than ETH. Now, we don't know about that, right? At least the poll we ran didn't seem like people on Twitter agreed with it, but there seems to be enough support for that theory too. There are enough believers in that.
Yeah, and I mean, each day in crypto seems like a week in the real world. And on the time frame that VIX put that prediction on for the end of the year, there is a lot that can happen between now and then. So yeah, we'll see very widely varying opinions on that, especially as we start to see Ethereum rolling out some of their improvements like EIP 1559.
Yeah.
And then if we get the merge before the end of the year, I think that could really be the kicker for BNB's dominant story of flipping ETH. If it doesn't happen, then yeah, it really is anyone's guess.
It's true. Yeah. And then there is this whole bit around scaling and gas fees, right? So I think a lot of that will play out over the next few months. And you're right, there's still multiple months to go, right? We're in the early innings of Q2, and lots can and will happen over the next few quarters. And we'll see how that unfolds. Of course, we like to track this because it's not only is it now a huge market cap token, but also just doing a lot of fresh, interesting things. So we'll keep looking at BNB. We'll see where it goes.
Great. So yeah, those are the assets to watch. What's another interesting one to chat?
I think we could go back to a few of the DeFi ones that we have seen, right, with Comp and Aave, and just see what's happening with them, right? Like, what's the story with those our usual suspect DeFi tokens? So we'll just go through a few, right? We'll just touch upon very quickly and see what's going on with them. If you look at Comp in general, very broadly speaking, it seems to be very range bound. It has seen a bunch of sort of nice good movements up, and then followed by a pullback, and sort of that pattern has repeated. If I were to draw a line here, I'm going to just try and draw a line here, a horizontal line, say here roughly, and then another one down there somewhere here, I would say roughly. Yeah, it's fair to say that the price is sort of bound between these two, right? So about a 530, 540 as the upper bound and 350 as the lower bound. Of course, we've seen some breakouts above that, going as far up as 600 plus, right? Some other spikes here with sort of long wicks. But for the most part, if you look at candles over the last 3 months, it has stayed in the zone. One way to read this would be that I think it's an efficient market hypothesis that people have understood what Comp is worth and everything is priced in and there are no more surprises, and so it's good and fair price, right? That's one way to kind of understand that, and
sure.
Right, and sort of feel that from a standpoint of overall movement, it's at a good price, and assuming the adoption continues to grow, you might end up seeing the token keep tracking upwards, because again, from an overall price movement standpoint, it's still trending upwards, right? So I think that's one way to kind of read this. I wouldn't be surprised if Maker and Aave also look similar, and they do, right? These also, we have seen Aave that's also sort of bound between a couple of levels between 420 and 302. These are the lines we had drawn in the past, and it seems like it's still sort of there. It's surprising that Aave actually just went all the way down with this flash crash. And plus, it seems like there was massive volume. So it does seem like somehow there was massive sell-off yesterday on Aave. That's quite interesting. So I don't know what that means really, right? It broke through 302. It went all the way down to 270. We had put this 302 as a marker, saying that it'll definitely get tested. It seems like it even broke through that. And if you look at the volume profile here, it's just unbelievable. It seems like everyone was getting ready to sell Aave. So I don't know. Did anything happen to Aave yesterday?
No, wasn't aware of anything particular affecting Aave, not affecting any of the other DeFi protocols, but perhaps they had higher liquidity on some of the exchanges. Here we're charting the prices from FTX. If there were a lot of Aave on exchanges, that could explain a larger sell-off, whereas for the DeFi tokens with more liquidity on-chain, even network congestion was somewhat reducing the sell-off. I saw that with Link as well, where Link had just made an announcement, set a new all-time high, just above $44, and when the flash crash was happening and it was testing kind of 38 and below, on Uniswap and 1inch, the prices were still above 40. They just hadn't gone as low as they were on Binance and others. So it's an interesting dynamic we're now seeing between the CeFi and DeFi when it comes to liquidity and price action.
Interesting. Perhaps some arbitrage opportunities and the next flash crash. Right? So,
yeah,
definitely interesting. Yeah. So here, quick look at Link. We won't get into this, but yeah, it seems like this was the big drop here, going all the way down to 29, and now it's back up there. Okay, so let's look at a couple of others. Maker seems to have spiked up a little bit more recently, earlier this week, and then it's back. It's still trending well. It's trending. It's a very strong trend.
And so Maker's news, I mean, we had Will Remore from Maker on one of our earlier protocol sessions. He's an analyst there working on the real world assets. And so, yeah, that's launched. There are now the first governance proposals passed for real world assets to be part of the debt markets on Maker. So, yeah, definitely a positive sign for the future of what's to come for Maker.
Fantastic. Yeah, they usually have strong fundamentals. So, again, given that the market is trending upwards, I would expect this token to keep doing well, at least stay with the trend for sure. And it's good for that. Sorry, yeah, go ahead.
Well, and yeah, that gap between the EMAs and where the price is currently, I expect, to see that continue to stay ahead of the trend.
Oh yeah, good one. That's good observation. I agree. The gap is noticeable. It's quite very prominent. On top of it, if you look at the price that it was struggling through in March and Feb, I think it has come out of the zone. It was again very range bound. Kind of looked like how the price was moving for Aave and Comp, but it seems to have broken out of that. So yeah, good for Maker. Okay, let's quickly look at Uni and Sushi. Super quick, and then I think we'll be done for today. So if you look at Uni, well, there isn't a new story. I would say the trend sort of continuing. Of course, yesterday's flash crash impacted a bunch of tokens. But it seems like Uni's story has been there a little even before that, where I think maybe this was just a normal profit taking. We've seen that with some of these price movements with Uni. There's like a big green candle and then some reds follow it, where the price retraces back closer to like the EMAs. And then it may just be that, right? So we saw this once, we saw this twice. And there was like a further pullback, and this seems to be again like a huge big green candle, which is very Uni style. They have a lot of these big green candles suddenly in the middle, and then a bunch of reds after that. It seems to me like if you're a trader, if you're a Uni trader, there's plenty of swing trading opportunities here, because it seems to be following this pattern. Every time after a big green, if you see the right signs, right, of a sort of reversal or retracement, at least even if a short-term retracement, there is a possibility of taking profit and re-entering, or if you're doing any kind of leverage trade, maybe a short position and then close it quickly, make some profit. So yeah, and that's probably what is happening, right? Because Uni also has perpetuals on a few exchanges, and maybe people are just going leveraged, waiting for that spike up, and then they short it, and the price corrects back, and then it goes back up, right? So it's up and down.
Yeah, and like we were saying, there are the two prices. There's the Uni price on chain itself, and the one in the centralized exchanges. and including then the one that's there with the perpetuals on uni. So yeah, we can see quite large arbitrage opportunities at time between those.
Yeah, completely. Okay. Last couple, sushi. Oh, well, sushi doesn't seem to be doing well.
No,
I
that's not
don't know what.
looking
Yeah,
like
I don't know what happened to
trend is going to
sushi.
hold.
Right. So this is interesting. If you just follow the social media again, last few days there has been a, just sort of sushi's desire. I believe even the CTO of sushi was asking for like, hey, can I look at some layer 2 options? I think there has been certainly a desire, at least within that team, to go towards layer 2 and a more scalable solution. We've also seen Cake come out in front, and I believe Cake, in fact, PancakeSwap even exceeded Uni in its volume last couple of days or so. So maybe it's eating away definitely from sushi as well.
Yeah, although Cake's not without its own issues. There was some challenges there around the number of blocks behind that the UI was actually displaying to users. So yeah, Binance Smart Chain really under a lot of load as the popularity increases. So yeah, volumes being traded are one thing, but then how the platform can keep up and manage those volumes is certainly another.
Yeah, true. So that is a good point. Cake certainly is having that good problem to have, if you may, right? Where they're seeing ton of adoption, their gamification is working, but obviously the system is getting stressed. I would say if they solve it, they will come out as a winner. If they don't, then of course questions would be put forth and it might see an alternative trajectory. Also, I remember about sushi, Paul. I think another thing we had discussed last time, and part of that story also may be unfolding, is a bunch of sushi tokens got unlocked. And again, I think there was a lot of discussion around those being dumped. So it's also possible that's what's happening, just lots of selling going on.
Yeah, no, and definitely as soon as the overall market is bearish, then it can have a compounding impact on some of that rush to sell. As people either look to move back into other assets or just lock into stable coins. So yeah, it'll be interesting to see whether sushi can recover from that.
Yeah, totally. And in fact, just as a sort of closing conclusion on it, and I will mention that obviously this is not investment advice, so anybody who's listening, please do not take it as such, right? This is just our analysis looking at the charts. It does seem like Uni and Cake are much better ones to go with. If you wanted to go play in that AMM market and go pick up one of these tokens, going with Cake certainly seems like an interesting one. You can also go with Uni, and like I mentioned, there are perhaps some opportunities to swing trade here. Sushi, probably you might want to wait and watch a little bit and see what happens, right? Given the various things that are unfolding with sushi. And once a new trend is formed, maybe that's when there's opportunity again, either to come back and go long or go further short, or however the price sort of emerges with the next few days.
Yep, I definitely agree with that. And it's going to be another interesting week. I mean, we talked about the volatility this weekend. Just can't see that easing up. Maybe by the time we chat again for the next charted session next week, we'll have another view on things, but definitely looking at the week ahead, I'm expecting it to be just as volatile.
I think so. I think you're probably spot on that. And yes, week fast forward, and we'll be back on charted, and we'll take a look again. We'll see where things are.
Great. In the meantime, do make sure to follow us on Twitter at Going Elliptic, or subscribe to the newsletter at goingelliptic.com. We've got more content going out there, including some of the summaries and show notes from these episodes, so you can look back over them, and the valuation models that we looked at in the last kind of edition of Charted. There's a deep dive that's going to be posted there very shortly. So yeah, subscribe to make sure you don't miss it.
100%.
Now, this isn't our only Going Elliptic recording today, Shanky. Who have we got coming up in just under half an hour?
Yeah, we've got a very exciting guest today. So we have Mike Van Rossum. Many may not know him by name, but I'm 100% sure that his software is well known. He was the first few folks who put together this amazingly popular crypto trading bot called Gecko. Sort of, I guess, inspired by the movie character Gordon Gecko. So it has a nice play to it as well. And that was very popular even in the beginning, right? When people were just getting into trying to figure out, automated algorithmic way of trading the markets, crypto markets. There was Gecko and nothing else. And so definitely we look forward to speaking to Mike. We will learn a lot from him. He's a very seasoned trader. You can think of him as an OG trader who's built the tools, seen the markets, and we're really looking forward to it. Another 30 minutes or so, in fact, a little less than 30 minutes, we'll have him online for a live session. So I think it's a must-watch one. It should be a good one.
Absolutely, same here. And yeah, we'll give everyone a quick break, including ourselves, and tune in again for the next episode very shortly. All right, thanks, Shanky.
Thank you, Paul. Super.